Welcome to the Market and Leaders podcast, where we sit with the minds of the people that don't just watch the markets move. They understand why they move far before the world catches up. Now, this is probably because we are no longer in a normal market cycle. We're in a confidence cycle. Confidence in currencies, confidence in institutions, confidence in what money really is. And when confidence starts to shift, capital doesn't ask permission. It moves. And that's really what our conversation is going to be about today, because we're living through a time where gold is back in the headlines, silver is just waking up, and Bitcoin is not bowing down to act like any asset we have ever seen before. So the real question is not which one wins. The real question is what the story is they're trying to tell us collaboratively. And I wanted to unpack that with someone who has spent decades not just studying price action, but studying psychology, sentiment, and the deeper monetary signals behind the noise. I am very, very excited to welcome on Florian Grummes, founder of Midas Touch Consulting. Welcome to the podcast.
Thanks for having me again, Lyndsay.
I mean, what surroundings? First Dubai, now here, Cape Town. I mean, we go all the exotic places.
Yeah, I wonder where I'm going to meet you next time.
Where are we out to next? I'm going to say Panama.
Oh, nah, maybe. Let's see.
So, Florian, before we even talk about price, I want us to talk about mindset.
Yeah.
Okay. When you look at the global macro environment right now, does it feel like we're actually in a normal cycle, like late cycle phase, or do you feel like it could be entirely something new that's starting?
That's a good question to start with. I mean, if you look at the general stock markets, they're in an uptrend since basically the financial crisis, with massive ups and downs along the way. But overall, I would assume we are rather in the later innings of that whole large bull market. But we always have to remind ourselves, I mean, it's not just the US, it's basically all central banks, all governments, all over the world creating money out of thin air, right? And that drives money into equity markets. And that is something we have, maybe it's an extreme example from the German hyperinflation 100 years ago. But during that specific time, the stock market went nuts, even though the economy was collapsing, even though the confidence of the investors was collapsing, but the money was fleeing into some form of assets, right? Yeah. And so I think that's overall, I've been on record for years now saying that we are in a crack-up boom and that this will most likely continue over the coming years and probably also intensify, meaning that, all or most of the rather better assets will move higher in nominal terms, right? Really? Of course, if you look not in dollars, euros, or whatever currency you pick, but if you look at it in gold ounces, the picture changes completely, right? Mm-hmm. So I'm a big fan of the Dow Jones gold ratio. And you can see that this whole stock market, bull market that I just talked about, actually didn't happen in gold ounces, right? It's a totally different picture. If you look at it in dollars, it's amazing, tremendous. If you've been a great stock picker and you've picked Amazon, Google, and maybe Nvidia, congratulations, right? But in general, if you look at the Dow Jones index, it's down against gold massively over the last 25 years. And the trend is clearly further to the downside. So, I mean, that's how I started in the precious metal sector, the early 2000s, believing rather early that this Dow Jones gold ratio will move towards 1-to-1, which we have seen at the last peak of the bull market in gold in the late 70s, right? Mm-hmm. So people need to be aware that you can look at the markets in nominal terms. We are all short-term thinking in dollars in our own currency. Right. But the real picture only emerges if you look at it in gold ounces.
Okay. Well, if we look at this from investors, when you watch investors moving between gold, silver, Bitcoin, do you see a competition between them, or are they quietly building the same narrative, maybe just from different perspectives?
Well, I mean, there's, of course, I mean, we've seen a fierce competition between the the Bitcoin maximalists and
Bored.
crypto guys versus the gold bucks. I've been early with Bitcoin, right?
Yes.
And I mean, we've been always saying they complement each other because they're rather uncorrelated with each other. Bitcoin has some features that makes it superior to gold. And on the other hand, gold has a lot of features that makes it superior to Bitcoin.
Right.
And I've been always saying, generally speaking, you want to be invested in both sectors. I don't see a competition. Right now, I assume that we are in a crypto winter, so I avoid the whole crypto sector completely out of it, watching it patiently from the sidelines. But down the road, who knows how this is all playing out. I've been on the record that this correction in Bitcoin, which has started in October, might become a bit more ugly than many people would wish for, simply because there's so much leverage now in that sector, with all the treasury companies buying crypto and Bitcoin on their balance sheet on margin and credit. And so it's going to be interesting how this is playing out. I'm right now fully focused on precious metals.
Really?
No doubt about it.
So in my panel this morning, we actually did talk about, how things are moving in Africa and who gets funded, who doesn't get funded. Now, Bitcoin, it does tend to tell you sort of a little bit of the gist on what's going to happen throughout the week for the rest of the things. So one of the things that came up was when an investor sits there and says, I'm going to sit back and I'm going to wait to see what comes out next. Kimberly Ann was, very clear about it. She said, if somebody comes up to me and says, I'm going to wait a little bit, it's because I'm not telling my story properly. So do you think Bitcoin is still in the process of telling the story properly? Because I feel like the education is not there because it's so technical that people just sort of get lost and go, I'm just going to wait and see. Do you feel this?
Yeah, I mean, to really understand Bitcoin, I mean, you can study for 10 years and you're still basically learning every day. I think we've now seen more and more that there's a lot of questions like how sustainable this is really in the long run. Because the initial so-called idea of it, like that it's also being used as money, has not played out yet, right? It's not being used as a currency for our day-to-day life. It's been a great speculation over the years, but you needed to have good timing. The crypto winters, the bear markets have been brutal.
Yeah.
So I've been through 3 bear cycles, and this is now the 4th one. And my lesson clearly is just wait, move to the sidelines, don't do anything. This is always ending in a complete capitulation, a very nasty. I mean, remember the last time FTX went bust, right?
Yeah.
And Bitcoin went down to $15,800. Yes, and then over the following 3 years, it recovered and rallied up to 126,000. So if you bought at the low, wonderful. But it took a while to get there. And right now, my assessment is very clear. Like, this is a crypto winter. Probably the worst is still to come here. Bitcoin, generally speaking, is rather uncorrelated with gold. Maybe not in the very short term when suddenly everyone is risk off for a day or a week.
Yeah.
But generally speaking, gold, commodities, and Bitcoin are uncorrelated. While, of course, Bitcoin is very much correlated with the NASDAQ. And that's also, as you rightly pointed out, raising question marks right now because Bitcoin is already in a correction since October, while the stock market is still slightly edging higher, right? So, yeah, maybe there are some signs, but then again, it's a small sector still, very speculative sector, and I think it has some personal issues right now.
Fair enough.
I mentioned that before. I mean, Michael Saylor has been the guy who's been buying Bitcoin relentlessly on credit, on margin, basically, right? And he was not really able to push prices higher. I mean, what would have happened without him buying all those Bitcoins?
This is true.
Right? So, I would be very careful in that sector right now. I think we have more downside now.
There we go. So there's a quick little insight. Jotting it down. Now, Florian, because volatility has almost become like the new baseline, we'll say, across every asset class. When Bitcoin makes these volatile, these violent moves, what is actually being told about the liquidity in the broader system?
I mean, overall, liquidity has still been rising up to most recently. Again, I mentioned it before. I think if it's not the Americans, then it's the Chinese who are creating new liquidity out of thin air. Now, we've seen all this big stress in the Japanese bond market. They will also have to print more money. I mean, that's the general story for nearly every country on the planet. And I wouldn't overvalue what's going on in Bitcoin. Of course, it plays a role. It's a factor simply because psychology quickly sparks over into other sectors.
Right.
And risk off, risk on is like a constant theme nowadays. Like, one week it's all risk on, and the next week it's all risk off. Oh my God.
So true.
And that's also, by the way, the opportunity and the beauty in our sector. If you're willing to employ longer term capital, right? Maybe thinking forward for a few years in our sector. We all know it takes a long time.
Right.
So to develop a project and build a mine, if you bring that, you're certainly a contrarian and you have a very small, but I think very promising niche. Yeah?
Well, what you see with Bitcoin or crypto, not just Bitcoin, but pardon me, crypto, is that it really did bring in a younger audience.
Yes.
Very much so. And then it became so expensive, they're like, well, now I can't buy that. But it allowed them the opportunity to dive deeper into what makes it, what's needed, what surrounds it.
Right.
And, oh, there is gold. Oh, there is copper. There is all the things. Let me take a look at that because maybe that I can get into. So I can see that they marry each other very quickly. And what was so fascinating to watch is now there is a younger crowd going, maybe I can look more long-term for my investments because now I've taken the time to do the due diligence. Bitcoin, crypto was very like...
Yeah.
Right?
I think that that is actually one of the most important achievements that Bitcoin has done to raise the awareness of and what type of money system we are and what money actually is, and people starting questions. I mean, honestly, when I was 20, 25, it was not at all about this kind of things.
Right.
And nowadays, as you rightly said, the younger people are pretty educated about all this stuff.
Yeah, it's sort of the opening.
For us in the gold sector, it's been very difficult to attract new, younger people and generation, right? So thanks to Bitcoin, that has happened. But what I always try to avoid is this religious kind of like following just one sector, just one stock, just one story.
That's right.
Or just one asset class. I don't think it's working out like that.
Diversify.
Yeah, you have to be open-minded, So when I talk with lots of Bitcoin guys, they have no clue about gold. They have no clue about mining. They have no clue how difficult it is. They have no clue about the long-term kind of history of gold. Best case, they understood that, gold window closed in 1971, and since then they're basically in a confetti party, right? That's maybe what they still understand, but going further, it's already questionable. So I'm often on these crypto podcasts, and they often it's a smelter town kind of thing. I've seen them very much not being humble the last few months. Now, with the falling prices, the attitude has been changing in the recent 2 or 3 weeks, maybe. But that's an issue. And of course, it's also dangerous because, I mean, if a young generation has seen how to make a lot of money very quickly and then seeing it evaporating because most of the altcoins go to zero or basically become more or less worthless.
Right.
It also maybe brings in more question marks of how much does it actually make sense to invest and study.
So
it's also a little bit of a dangerous kind of development here. But overall, I think it's important that the people get more educated about what money is.
100%.
So that's the moment. And I mean, there's famous saying, people would understand what money is, we would have a revolution next morning, right? So, I mean, this is 100-year-old statement. So
this is true. Yeah. So let's push that a little bit further. I'm curious from a psychological perspective, what is the biggest emotional mistake that you're still seeing investors make right now while those markets move so fast?
I mean, first of all, I think most people lack the understanding of the cycle.
Yeah.
Right? So like I said before, I think you don't find a lot of people who can clearly tell you we are in a crypto winter. Avoid that sector for now. Maybe in 6 months it looks completely different, but right now it's not the time to be there. It doesn't make sense.
What about in the gold, the silver? What about in that aspect? What's the biggest mistake you're still seeing? Because gold it was slow and then it went whoosh, and silver, whoosh.
Yeah. It became pretty fast the last
Pretty
few
fast.
months. But let me remind you, in end of October, we were all like, wow,
Yeah.
gold pulled back $500 in 5 days. Crazy.
Yeah.
Now, just 10 days ago, we were all like, wow, gold pulled back $1,200 in just 2 days. And the volatility has dramatically increased. Yet, overall, we have a much higher price.
Right.
Right?
Yeah.
And it was clear that silver would join the party at some point. I mean, I've been a silver buck. I've said we're going to break out above 50. I said we're going to 100. Did I see that this would like accelerate like this crazy? No, not necessarily. But of course, the metal's been ahead of themselves a little bit in January. Now we had a healthy pullback. And coming back to your question about the psychology, now everybody's paralyzed. Like 3 weeks ago, if you would have told them you can buy gold at 4,400, they would have loved it. Once actually the correction happened, everybody's paralyzed.
Yeah.
Oh my God, what happened? What to do now?
Right.
And then they wait, they don't trust the situation, and then market's creeping higher again. And in a few months, they're like, oh man, I should have bought at that level.
Sure.
And now we're at 5,500, 6,000, whatever. And then again, they miss the train and then constantly running behind the train,
That's
right?
true.
So
That's true.
you need to plan ahead. You need to anticipate this. Of course, you don't buy into these FOMO rallies. You always want to have some liquidity on the sideline to be able to act, right? I think that's one of the most important insights for me in the last 30 years, that if you always constantly fully invested, you don't have a lot of options if things go in a different direction than you expected, right?
Yeah.
So, if you get these nice pullbacks, and it's been a sharp, I mean, silver went down 43%, unbelievable move, but we made a massively new all-time high at $122. It's been the best performing asset of all.
Yes.
A crazy rally. And I think overall, I mean, the bull market is intact. I have no indication that we have seen a long-term top here.
Okay.
Can this take a while to digest this roller coaster?
Yeah.
It can, yes. But then again, I mean, we are in a bull market which is accelerating now. And I would be surprised if this takes now 2 years to digest. I think more likely what we have seen so far in the last 2.5 years, you get these sharp pullbacks and then a few weeks sideways consolidation on a higher level, and then market starts to move higher again. And gold actually has held up rather well. I mean, it's oscillating around the $5,000 level as we speak, and I think it might take a little bit longer, but I assume we're probably going to see new all-time highs before the summer.
Really?
This bull market is intact. I think it's going to continue higher. And coming back to that example from before, yes, I understand it's an extreme example from the Weimar hyperinflation, but people really need to study that case, because back then, gold oscillated and like pulled back and forth 40-50% in a few days, but overall it went up millions of percentages, right? So I think that's the blueprint, more or less to say. Going forward, I think we're still in a healthy bull market. The best is still to come here.
That's really good news. So, one of the things you mentioned is really around gold, and it has historically been the asset people go to when trust starts to crack.
Yeah.
So do you believe gold is still functioning as the ultimate confidence barometer, or do you believe that there's something else forming here with maybe a different asset even?
No, I definitely that's the safe haven place still until today. I mean, it's this whole bull market. It started in October 2022 at this triple low at 16.15 in gold, when we got the news that more and more central banks started to buy, right?
Yes.
And that's one of the big drivers over the last 3 years or 3.5 years. And this is not going away. I mean, Poland just a few weeks ago announced that they're going to ramp up and buy even more gold. That's going to continue. And we have so much like geopolitical tensions everywhere. And especially, of course, China versus America. I mean, this is not going away. I think Xi Jinping, he just 2 days ago said like people should basically drop more US treasuries and buy more gold. So this is going to continue. And gold has been always a safe haven. And so far, nothing has changed.
Do you think that the geopolitical volatility that's happening is the thing that's making them buy more gold? Like, why do you think they're starting to buy more and more and more and hone that in?
Yeah, I mean, we are seeing basically a financial war, right?
Yes,
I mean, that's in the making, slowly but surely intensifying. it's hard to say where exactly it started.
Right.
I think one of the starting points probably was when Xi Jinping came to power in 2016, and then the Chinese started to drop or decrease basically their US Treasury holdings, which was essential for the Americans. They've always been exporting their dollars, right? The whole world had to buy the dollars, and that is not really working anymore.
Right.
And I mean, that was then also the reason why, one of the reasons why Trump came to power in 2016. And now here we are nearly 10 years later, and the whole thing is much more obvious and more people waking up to the fact.
Right.
But there's no solution to it, right?
That's true.
So,
That's true.
I think the Chinese will continue to buy more gold. Now, the Western central banks are also more and more aware of it. And most likely the Americans also will have to ramp up their gold holdings to be still able to negotiate on the big table when it's finally about to, like, how do we divide the world? Like,
That's right. And there's so much of it happening right now. Now, Florian, I'm going to flip over here. Silver has always been the wild card in the room.
right.
In this cycle, does silver confirm strength in metals complexity, or is it still being treated like a speculative trade?
I think it's both. I mean, it became a critical metal over the last 6 months. I mean, we in our industry knew it
I'm
much
surprised
longer.
it took that long.
Yeah, of course. But sometimes things take longer.
Yes, right?
No, I mean, look, again, Chinese announced like export ban or basically massive regulations of silver exports. And we know silver is needed in all the data centers and all the tech applications for the future.
Right.
It's difficult to get. I mean, there's not so many new silver mines coming online. Most of the silver supply is a byproduct. A copper mine cannot simply ramp up production because silver went up. So most of the silver has been used, of course. It's an industrial metal as well. It's been also heavily used in weapons. So we should not forget that. It's very important.
Right.
So the Americans had to learn this painful lesson that, China has cornered the critical minerals sector. And whenever you want to build a weapon, you basically have to call the Chinese nowadays.
Yeah.
Can you send some of that stuff that we need for our weapons? And this is not going to work for the West. So
Yeah.
that's why the Trump administration completely flipped the script here and are very aggressively getting their hands in whatever critical mineral, whatever copper and silver kind of projects are available in the Western world, right?
Fair.
And we are here in Africa, and it's also not a secret. I mean, the Chinese control a large amount of Africa already, while the West has been sleepwalking. This is going to continue and intensify. Silver has always been much more volatile than gold. It came down, the gold-silver ratio, to 43 2 weeks ago.
Yeah.
It's been a crazy spike from 105 in April last year. Yes, it was way ahead of itself, was way too much overbought in the short term. So we had this massive pullback. The gold-silver ratio jumped back up to 65. But in the very big picture, I think that this bull market will not end before we see that gold-silver ratio at maybe 15 to 1, maybe 10 to 1, maybe even single digit. So last bull market in the 1970s ended with a gold-silver ratio at 15. The low that we have seen right now was 43. So we're still, in my opinion, a long way to go. And I've been also on the record that if you look at the long-term silver chart, we broke out above this 45-year cup and handle pattern, massive consolidation pattern where a lot of energy has been compressed over 45 years. This is not ending with a 6 months breakout move.
No.
And we've seen that in gold. It's rallying now since 2.5 years already. And gold has only been breaking out of a 13-year cup and handle pattern. So the energy that is being unleashed here in the silver market is much stronger, much bigger.
Awesome.
So out of this cup and handle pattern, we have now reached the target for that handle, slightly above $100. But the target out of this big cup points to $250, maybe even $500, maybe even higher, depending on where gold also goes. So it's going to be volatile, it's going to be wild, but anybody who sold their silver in the last 2 weeks, maybe even above 100, 110, certainly in the short term looks like a great trade, and congratulations. But you want to buy back your silver, it's pretty hard to get nowadays.
It is.
Premiums are very high, 30% you pay on top. So, and then you have to maybe pay capital gain tax on it, right? So then the whole calculation very much looks different.
Very much so.
So that's why I am holding all my physical silver. I don't give away any ounce.
Smart. That's
and
smart.
If we should see silver pulling back into the 50s, which I don't assume, but should it happen, I think it's a buying opportunity. Even probably if it pulls back below 70 again, it would be another buying opportunity already. But you can see it went to 64 and quickly snapped up, and it's
like an elastic band.
83, I think, as of this morning.
Yeah, absolutely.
So I think it's going forward. Silver maybe need a little bit more of consolidation here now. So I think going forward over the next few weeks, maybe months, gold will outperform silver most likely. But at some point, silver will show up again and then take over. Yeah.
So what great insights. Now, when you zoom out and you look at debt levels globally, currency debasement and central bank behavior, Florian, are we slowly moving towards a world where hard assets become mandatory rather than just an option in portfolios?
Oh yeah, for sure.
I think so.
Yeah. I think it's very important. I mean, you need to have assets outside the whole financial system, right? And that's exactly why you want to hold physical gold and silver.
Right.
That's been also the idea with Bitcoin.
Right.
I mean, Bitcoin is a little bit different kind of story. It's a digital asset. You can track it, by the way. That's a huge difference.
Oh, yeah.
You cannot trace the physical gold that you hold in your vault, but I can see all the transactions in your Bitcoin wallet. Right?
That's the positive.
Yeah.
Sure.
So that's a huge advantage for gold. It doesn't need electricity. It doesn't need internet. It doesn't need permission from anybody.
That's true.
Yes, the Bitcoin guys will tell immediately it's a permissionless network, and it is right. But then again, the masses are not able to set up their own electricity and internet kind of provider. Yeah,
Right.
it's already getting very complicated if you want to be completely independent holding your Bitcoin. So it's a very complex topic, but I think people need to hold physical gold and silver. And it's the most easiest thing you can do nowadays.
Do I just carry it in our pocket or?
Depending on how much you buy, right? I mean, if people don't have a lot of money, at least hold a few silver coins at home. You never know.
Yeah.
But of course, I mean, I would say anything above $10,000, you probably want to store in a vault,
Of course.
but I think it's mandatory. I would say so.
Yeah.
And it's still surprising how many people don't hold physical gold. They still believe in some paper constructs at best. So
Look
that
at the
means
world we live in.
that means they hold some ETFs. It's paper promise. Right?
Yeah, absolutely.
So I think we're going to see a shift in the next few years back to more of the physical, in many things probably related to mankind, because we have certainly lost touch with the ground and where we're coming from.
My goodness, have we ever. All right, Florian, we are going to play a little game.
Okay.
So markets and leaders always, we know that markets can be very serious. Here, we want to just lighten it up, have a little game. So this game is called Hard Asset Rapid Fire. Okay? I'm going to say a scenario, and you give me the first asset that comes to mind. Don't overthink it, just the first one that comes to mind. Global banking wobble.
Global banking wobble.
What's the first asset that comes to mind?
Japanese bond market.
Japanese bond market.
Yeah.
Okay, why?
I think that's where the most wobbling effect will come from.
Perfect. Okay, second one. Runaway inflation headline.
Gold.
Gold. I would say Bitcoin.
We haven't seen proof that Bitcoin is really an inflation hedge. Very speculative assets. You could make a killing with Bitcoin, there's no doubt about, but you needed to be early. Anybody who bought in the last few years above, let's say, $20,000, at some point was deeply underwater, and then it's rather a question of your own psychology and your understanding of the sector, right? Are you able to hold through these nerve-wracking periods of corrections or not? And I doubt that the vast majority of investors are able to do it.
No.
Because they're also lacking the knowledge, and they just invest in the latest, hottest kind of thing.
That's so
right?
true. That's so true.
So,
Okay, here's the next one. Ready?
Mhm.
Central banks surprise the market. What asset would that be?
I mean, one of the big surprises, or let's say surprises, but it would be a surprise for the mainstream kind of media and market,
Right.
would be if the Central Bank of China announces much higher gold holdings, right?
Really? Okay.
I mean, they have been very intransparent, I guess for a reason. But that would be a huge surprise in the Western world.
Right.
Probably would be a shock.
100%, yes.
So that would be one. And the other one probably, if Western central banks actually have to increase interest rates instead of lowering, which everyone is expecting.
Yep.
But we had a huge cycle turn in 2022 in the bond markets.
Yeah.
And they have lost not only the Japanese, but also the Americans, and I would say also the Europeans already, have lost the long end of the bond market.
Right.
I mean, would you lend a government $10,000 for 2, 3, 4% in this uncertain world? With this inflation, and so they're not able to bring down long-term interest rates anymore. I assume the market probably will demand higher interest rates down the road at some point.
All right. Okay, last one. Retail investors pile back in. Which asset?
Bitcoin. Probably.
Bitcoin, absolutely. Now, if you had one asset you personally would not want to be without in the next 10 years, would it still be gold?
It would be gold.
It would be gold, yeah.
And maybe as an add-on, I really like the oil sector. I've been saying this now for probably 8 months.
Okay.
I've been slowly building a few positions there. It's not a sector that I have been very active over the last 25 years. I traded oil a little bit in 2007 when it went to $150.
Yeah.
But since then, I completely neglected and avoided it, actually.
Right.
I think I had only one dividend play. It is probably one of the very few sectors or assets that is still rather a contrarian play and undervalued here. I assume oil is the Achilles heel of the Chinese. They need the oil. Now they have lost oil supply, the cheap oil supply from Venezuela. And Trump and the US are constantly trying to create more tension around Iran, which is another very important supplier for oil in China. So that's very critical for the Chinese. And then again, the typical cycle, like we have not seen a lot of money coming into oil exploration and developments over the last 15 years due to the bear market. So if there's any changes in the supply-demand kind of balance, it probably will be to the upside.
100%. Wow.
Yeah.
Well, Florian, it's been such a great conversation. Thank you so much for being on the show. See, the game's not that hard.
No, I enjoyed it. Thank you very much for having me.
So where can we find you if we want to learn more? What's your website?
Midas Touch Consulting.com. We have a Telegram channel. It's free for everyone.
Oh, okay.
I post my daily gold and silver calls there. We have basically a very healthy, respectful exchange of ideas, charts, informations, people from all over the world. It's a kind of a mastermind group, a swarm intelligence group. You learn a lot from other people. It's actually pretty fast. I get the news there and the channel before everyone else.
Absolutely. Yeah.
And everyone is welcome to join. You can find the link on our website or just look for Midas Touch Consulting. You can also subscribe to my free Substack where I send out all of our research basically. And of course, we also have a free newsletter, so it's everything there.
All the things. Thank you again for joining us. It's been
You're
great.
welcome. Thank you.
Now here comes the disclaimer. These are the opinions of our own with vested interest in any or all of the companies. So be sure to know your own risk tolerances. Don't use this as financial advice and always work with a licensed financial advisor. For a copy of our complete disclaimer, head over to Appeton.com. I'm Lyndsay Malchuk, right here with Markets and Leaders in Cape Town. We will see you next time.